FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/20/19. It's Fed Day. What is the Fed going to do? Well, certainly they're not going to raise rates. That would be a shocker. That would throw a real monkey wrench into the markets for sure. Probably not going to do anything, not going to cut rates. Just wait and see. The economy is fundamentally strong, and we're just sitting back, letting things play out. That's probably going to be what happens. What do you think is going to happen? What do you think the Fed is going to do? Probably by the time you hear this, the Fed will have already done it, but just send us your opinions to kl@kerrylutz.com. Well, somebody who does have an inside track, at least in terms of really solid trading credentials, really solid ability to peel the headlines away and see what's going on under the hood, is Nick Santiago, InTheMoneyStocks.com. And as always, Nick, welcome back. So the Fed, today is Fed Day. Gold was down $6.50 the ounce after having been up $3 or $4 earlier in the day. Now it's down only $5. What do you see happening here?
Well, right now, there's just a lot of jockeying for position. You just had some headlines come out about President Trump saying he's going to keep tariffs in play with China until a deal is really struck. He's not looking to remove tariffs, and it may be a long, long time. So that's all coming in, and there's a lot of jockeying for position before the Fed announcement. The FOMC is going to make their interest rate policy statement at 2 p.m. today. So basically, you just got a lot of jockeying for position. But when you look at the gold chart right now, and this is something that I've been doing. Last time I was on your show, I said gold has had an amazing run. It's due for a pullback because we went into a lot of resistance. Now it's all about the pattern. So if the Fed is very, very dovish, we're going to see gold make a move today. Spot gold could go easily right back to 125, 125 and a half. That's GLD would go back to 125, 125 and a half. If you take a look at gold futures, I think they can actually go to around 1325. So, I don't really see them going much past that. But again, it's going to be all about what the Fed says. They're not expected to make an interest rate policy decision or change, I should say, but they are going to change the verbiage. And maybe we'll hear a little bit about that quantitative tightening as well.
Yeah, so the quantitative tightening, you have to explain that a little bit because many of you out there aren't familiar with it. Basically, it is the Fed's purported effort to unwind its balance sheet, all of the mortgage-backed securities and treasuries that it bought during the Great Recession, during quantitative easing. They're going to get rid of, supposedly. How sincere is that effort, Nick? Well,
they started to really do it quite a bit in the past several quarters, but now they've really They know that the market after the December sell-off couldn't really handle it, so they've really backed off. And today, I think most traders and investors are waiting to see, is there a magic number? Is there a so-called dot plot that they were using? Prior to this, they were going to spin out $50 billion a month, and that's what they were doing. But again, these guys got $4.5 trillion that they have to unwind. It's a lot of money, and there's a lot there. So it isn't going to happen anytime soon. And we'll just have to wait and see what Fed Chairman Jay Powell says today.
Yeah. And if you had to guess, what do you think he's going to say?
I personally think he's going to tell us everything we think we already have heard. He's going to just basically say, we're watching the data. We're seeing that the economy is slowing. Last night we had earnings from Federal Express that basically said the same exact thing. And FedEx, down about 5% today. So, I think he's just going to stick with that spiel. There is also going to be a press conference afterwards where he's going to have to take Q&A from the press. And I think he's basically going to give us some insight on the QT of the unwind. But I really don't know what he's going to, what number he's going to throw out there if he does throw a number at all. But I have to think he's going to be dovish.
Yeah, he's going to be dovish. Do you think he'll pretend to not be dovish? And or does he just capitulate?
I think he's already given in. I don't think he really has the. He can act very, very hawkish at this stage of the game at all. I think he sees the market as being a fragile instrument. Outside of the United States, you have to really look at some of these. Europe is an absolute disaster, and Mario Draghi completely capitulated already and basically said he is not raising rates, and I think he's got probably another year to go in his term before he's no longer the ECB president. So the Fed has to help him out a little bit, or at least I think they will. And, if the U.S. raises interest rates, that just puts tremendous pressure on him as well as the Bank of Japan, and I don't think the Fed is looking to do that right now.
Yeah. Yeah, they've got to tread lightly. And if the U.S. goes in a different direction than the world's central banks, that's going to result in more capital flow to the U.S., more money pouring into the country. And as a result, it's going to be deflationary and injurious to our so-called allies in Europe, Japan, and elsewhere.
Absolutely. And we've already seen that. I mean, honestly, it has already started. I mean, I know the dollar has backed off a little bit from its recent highs, but Kerry, I've been bullish the dollar and I remain that way. So, I don't really see anything changing that picture. These other central banks, whether it's, the Bank of Japan, who's been fighting deflation since 1989, they really can't go ahead and do much. And then you look at, the ECB. I mean, they're really back is against the wall. I mean, they've really, crushed that market over there. And again, it's a failed science project. It's not a matter if it's going to fail over there. It's a matter of when it's going to fail. And that's how that. And traders know that. Traders, we look at charts. We're not looking at the headlines, or we don't even really care what is being said. The underlying theme is in price action, and that tells us what we want to know.
Everything is about price, right? The price. It's
all about price.
And the price can lie for a little while. They can manipulate it, but in the end, the price is going to assert itself, isn't it? The true price. Absolutely.
And we've seen that in 1999 going into 2000. We saw that in 2007 and 2008. And, you will see it again. I mean, right now, I still believe that there's plenty of liquidity in the system. So, we had that big December swoon. Actually, it started really in September down to December. Now we're at another pivotal juncture here. So, will the markets be able to get one more thrust higher? Yeah, maybe they could. But, we're really on borrowed time before we go into another, so-called minor correction, or maybe it even turns into a major correction. I happen to think, we're headed to more volatility in the next month or two. So, these markets right now have had a sensational move since December. I'm happy to say I've been a part of that run. And, now I'm looking at the market in a more cautious way up here at these levels. I do think there's potential a little bit more upside here overall, but the reality of it is, we're going to hit major headwinds again in 2019.
Mm-hmm. So you're thinking the market's heading south for 2019, or because it showed pretty remarkable strength here?
Yeah, I think we've had an incredible run, but now the easy money's been made. And even if you look at a chart of the S&P, you'll see that, we basically put in a little bit of a high around late February, and we've really, have gotten a little bit higher than that range, but not by much. And, there still could be one more short squeeze thrust as we go into the end of the month. This is end of quarter. So, as we go into the end of March, we could get, one more nice surge. But you get into April, May, June, those are, there's an old saying, sell in May and go away. Sometimes it doesn't work. It's going to happen this year. So, this is going to be a sell in May and go away, or, stay around and trade. You could do either or. I'll be trading it. But, again, I think we hit major headwinds when we get into April and May, and, could even start, really right around the start of April.
Yeah. Huh. So gold, you think later on, what we're talking interest rates cuts later in the year, got to be bullish for gold, right?
I would think so. I would think that right now, if the market goes into a swoon, say May, June, July, and potentially even August, you're probably looking at a rate cut in September.
Mm-hmm.
That's a rate cut, not a rate hike. I know everybody's thinking rate hike, but if you look at the 10-year U.S. Treasury note yield, which is something I follow each and every day, it's already broken down. It's already in a bearish trend, and again, you got a major pivot from the start of January at around 2.55% on the 10-year, but the reality is once you break and close below that, I mean, this thing's going to go down to 2%, and that's a level where I think, bond yields can start to bounce and move higher. And just so that your listeners know, when bond yields go down, bond prices go up, and vice versa.
Of course. Yes. And hey, if the yields start taking it on the chin there, that's a negative obviously for the economy.
It is a negative for the economy if they start to break down, because people are going to say, hey, there's going to be some panic out here in equities. And what happens ultimately is that when bond yields get to, say, 2%, I do think that somehow, some way they'll get defended there. And then, but that most likely takes us towards that August, September time period. And, if you get the Fed, if they come out and they cut rates, we'll see how the market reacts there. But any kind of a dip like that is bullish for gold. So gold has held up very, very well, and, even better than I even expected. I was not expecting gold to outperform the way it has, but, it's still a constructive setup. Now it's going to be about that pattern. What does it do? And, can it put in some kind of a bullish base? Because we really had a tremendous move when we got to around 1350. Then it backed off, as we talked about on your show prior. And now, it's all about what kind of pattern can it make now. So, it's a wait and see, but the trend is still up.
Mm-hmm. Interesting. So oil still stuck in the doldrums?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The Golden Age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Radruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the underfollowed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
Well, oil right now has been holding up pretty well. So I've been telling my members, we're probably going to stick between $60 and $62 if we get another pop in crude. So oil's still holding up, but it's not going up in any major way. I mean, that's really the bottom line. It's going to be, sitting right around where it is. And again, 60 to 62 is probably the max upside that I could see in crude.
Interesting. So it could be stuck for that long. Wow. I can't believe that. But it was just to think it was only a few years ago, it was $140 the barrel, and it was killing the world economy, choking it off. Now the U.S. going to be the largest exporter of energy in the world, largest producer already. And who would have thunk? That's why the future is very, very difficult to portend. You don't know what's going to happen. And as much as you think you might, you don't, because nobody would have really ever believed what we're going through would be possible here. Everyone thought it was going to be $200, $300, $400 a barrel oil. And guess what? You were wrong. And that should tell you something about the difficulty of predicting markets, but certainly in the short term, easier than in the long run. Because in the long run, just too many trends that you aren't aware of, too many factors that you just can't take into account, because nobody can. Not even the world's greatest AI supercomputer can do that, right, Nick?
Well, I'll be honest. Sometimes you can really get a good handle on it. Sometimes it gets away from you. But back in 2008, I call that oil top, and it can be done. It's just a lot of work, and you just got to really understand these charts and really don't sway from them. Don't listen to the news. Don't listen to all of the media hype that comes out there.
Yes.
Just watch price action, watch the patterns on the charts, and you'll always have, even though you may not be perfect all the time, you'll have a really solid indication. And if you're wrong, you can be wrong small, and that's the key really to what I do in this business.
Yeah, hey, better to be wrong and lose a little than to be right and lose a lot.
That's right.
I mean, that happens. I mean, it's called being right at the wrong time, and that can be fatal if you can't get your head around changing market conditions and change your stance, your position. Then it can be damn near fatal. So,
well, perfect example of that, Terry, was just what happened in December, right? Mm-hmm. Remember, in December, the markets were tumbling. And, if you didn't really know what you were doing, you probably sold out at the bottom. And then look at the massive rally we've had, this past year, S&P 500, up 13%. So, I mean, it's a perfect example of what we were just talking about.
Yeah, absolutely. Couldn't agree with you more. So, there any other markets we need to be looking at and paying attention to, Nick, for the upcoming rest of the year?
Well, I think the bond market is very, very important to follow, and you could just follow that easily by watching a yield chart. And we talked about this just a few minutes ago, but I think that's really talking to us a bit. All of these Fed meetings are going to be very, very important. We have the meeting obviously today, and then you're going to have this, late April, May 1st meeting, and then you have a June meeting, a July meeting. September meeting, in my opinion, is most important. But again, central banks, they are the key to liquidity. And, as long as there's liquidity in the system and it's flowing, markets can go higher. When that liquidity gets pulled away and there's a vacuum that gets sucked out, these markets will fall, and they will fall fast, and they will fall furious. And that's exactly what we saw in October, and we saw that again in December. So, I think traders just got to be able to follow that money flow and make sure they know when the liquidity is plentiful and when the liquidity dries up, because that's really what's moving the markets these days.
I couldn't agree with you more. Anyway, we go over to inthemoneystocks.com. What awaits us there, Nick?
Come on over. We put tons of content out each and every day. The traders can also come over and check out my Twitter feed. That's going to be at Nick Santiago 01. And again, we put tons and tons of content out each and every day. And we got a Fed meeting coming up, and it should be a blockbuster day. So we're looking forward to it. Get some volatility there, and then you have a Jay Powell press conference. Get to hear what he has to say. But for us, really, it's all about the charts. We don't really care too much about the news. We're just going to look and tell us, let price tell us what to do. Yeah.
Yeah, just, our shows appear on YouTube, Nick, and, this guy commented, when I heard the mocking chuckle and statement, Bernie Sanders will never be president. This is why I love what I do here. Be president. I sure hope not. And I had a flashback of the video compilations of the left mocking Trump and stating the same thing. He'll never be president. Makes me cringe. There is a difference. From the get-go, I said that Trump was going to be our next president. And guess who was right? So Bernie will not be our next president. He seems to get beat up a lot. I don't know if it's the wife, Hillary Clinton's goons, at the Democratic, and I don't want to get political, but this is just an observation, at the Democratic National Convention, the guy had bruises on his face like he had been slugged. Like Hillary's guys said, Bernie, you better work this thing and everything will be fine. But if you don't, you're going to regret it. And evidently somebody...
They get violent, those liberals.
Yeah, they sure do. And there's nothing more violent than a liberal shower door, evidently, because it like hit him in the head. He's got a gash. He's got a huge bandage there. Hey, I don't know.
I remember that.
Yeah, I'm all for conspiracy theories. But, you know, these liberal shower doors, you really got to be careful of them. Anyway, hey, find us over at financialsurvivalnetwork.com. Sign up for our newsletter. If you missed our webinar last night, send me an email. I will send you a link for the replay. It was an amazing evening about gold royalty companies and royalty streams, the way to make money, whether the price of gold is going up a little or down a little, you will make money in these stocks if you play them correctly. I'm not telling you to do it. Obviously, I'm not a licensed financial advisor, although, hey, I could lose you money just as well as they do. Anyways, just email us, kl@kerrylutz.com. And if you're listening on the podcast channel or you're on YouTube, please like, share, subscribe. Really helps me a lot. Helps get ideas out there to people who would never get them. Ideas like Nick Santiago's that you just don't find on CNBC, the mainstream, even the alt media. You just don't find rational financial discussion and analysis. Nick, as always, we'll talk to you again soon. Thanks so much for coming on.
Thank you. Great to be here.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.